CEO of Bantam Incorporated, a multifamily office in New York. Just a quick disclaimer, I'm about to talk about the markets, but nothing that I say should be considered an investment recommendation or investment advice. If you'd like that, give me a call and get me retained, and I'm happy to help you out. Otherwise, this is just my observations on the market and food for thought, and you can take them or leave them as you see fit. So, we've had a couple of interesting days in the market here. Markets. On Wednesday, the Fed cut rates by 25 basis points. And then afterwards, Jerome Powell signaled no hurry to do anything else. The market didn't like that at first. But then on Thursday, yesterday, the market decided that that was okay. Started to go up, and then in the afternoon, I think around 1:20, Donald Trump sent a tweet out that China is not moving fast enough on the trade deal, and that he was going to throw more tariffs on another $300 billion worth of U.S. imports from China. Now, this is, in my opinion, this is a gangster move by Trump. He said he doesn't care about what happens to the stock market. He's basically gone full Baron Harkonnen. And I think this has been a long time coming. It's something that I've thought about. I think that Trump has gone into scorched earth mode. He's got, I think, well over a dozen investigations into him and or his family dealings. And if he's not reelected, there's no pardons, there's no immunity, and I think he's looking at real problems. That's my speculation. But anyway, that's the setup. So what happened in the markets? A couple of things that are absolutely critical. First is the dollar. Got to talk about the dollar. The dollar has reached escape velocity. So this is a chart of the dollar here, a daily chart, and you'll see it's been trending up since the beginning of 2008, and we made this big move yesterday, and we've cleared all this resistance going back to the middle of 2007. It takes a lot to move the dollar because it's obviously the world's reserve currency. Essentially, the world cannot really function with a really strong reserve currency. It breaks things everywhere. And the problem is that the whole world is short of dollars because most of the corporations and many of the countries in the world borrow in dollars. So they need dollars to pay back their debts. So if the dollar rises, their debt rises. And this is a huge problem if you think about it. If you're in Brazil and you make money in reals and you pay your debt in dollars, if your currency devalues by half against the dollar, your interest burden and your principal burden has doubled, because now you have to pay back twice as many real to pay back that dollar debt. And a lot of companies obviously would just go bankrupt if that happened. So that's a real problem. The dollar is likely to continue to rise for a number of reasons. The first is that if you look out across the world, there's $14 trillion in negative yielding debt. So interest rates in the U.S. are still, around 2%, a little lower, depending on what maturity you look at. So that's going to attract capital. Also, the dollar is a port in a storm. So it looks like we've got trouble coming. So investors are going to want to be long dollars. So what's the implication of strong dollar? There's many, many, many. So the first thing is, and this is probably part of Trump's calculus, is that it's going to hurt China right away. So here's a chart of renminbi. This is the dollar renminbi cross. Look at what happens yesterday here. Renminbi spikes. We're up at 6.94 to the dollar. That if it crosses 7, it's Katie bar the door, and who knows where it goes from there. I've heard people, talking 8. I don't know about that, if it goes to 8 or not, but it's going to go higher. This is a long-term chart of renminbi going back to 81. So why does this hurt China? Because they have a lot of dollar debt. So it's just going to make their debt more expensive. And of course, they are wildly indebted now. On the flip side, of course, from the Chinese perspective, it does help them in the tariff wars because, hey, if you slap an extra 10% tariff on and we devalue our currency by 10%, we've sterilized that, and no muss, no fuss, and they don't worry about it. So, right now, Xi could devalue the renminbi, and it would be seen because of Trump and how bellicose he is, it would be seen as a move of strength by the Chinese populace instead of a move of weakness. It would be seen as Xi standing up to Trump now. So I think that's absolutely on the table. If it happens, Chinese stock market probably goes into a tailspin. I would be looking to get long at some point then. And also, ultimately, the Chinese will have to let the renminbi go, because if they ever want to be a reserve currency, which is possible, they're going to have to let the renminbi float. So long run, it would actually kind of be good for them. Short run, not so much. In other markets, let's talk about copper. So copper, also lovingly referred to as Dr. Copper, because it is a very good economic indicator. Copper's been in decline. This is a long-term decline chart. Let me go a little closer here. All right, there you go. So here's a 5-year chart. Look at this. Just got crushed. It's been getting monkey hammered, got crushed yesterday, and this is kind of this Maginot line here at 260, right where it's at. If it fails at 260, if it fails to hold 260, it's probably going down to somewhere around 2.25, 200. This is all really negative already for global economic activity. This chart is awful. And what this is telling you is that the whole world industrial complex, which uses a lot of copper, especially in housing, the demand is just collapsing on that. So not good, and that will probably continue. Next up, oil. So as I've written, some of you might know, I'm bearish on oil just because long-term oil is now in a fight with the semiconductor industry, because that's what solar is. Solar panels are semiconductors. I'm putting all my money on Silicon Valley and the semiconductor boys against old world oil, which hasn't made a real advance probably since the Model T. So oil got absolutely crushed yesterday. It's up a little bit this morning, but you'll see it was down about 7% yesterday. Long term, I'm extremely bearish on oil. Now, that doesn't mean oil can't spike, in various places, but long term, oil is going the way of whale oil. And that's just the way it's going to be. So, don't want to be in it now, don't want to be in it later. Let's talk about gold real quick. So, gold, I'm long of gold. Would like to have been longer, haven't been able to get in. I thought the strong dollar would bring gold down. I'd have a chance to get in, but what do you know? Trump front ran me on that. So gold spiked yesterday a couple of percent. It is now in open field land and ready to run. I would be very surprised if gold didn't take out these old highs here from 2012. I think in the short run, dollar strengthens, gold has some headwinds, although it's held up very well in the face of a strengthening dollar. But ultimately, I think in the next year or so, the dollar will weaken. The dollar will be a port in a storm, but eventually that's going to reverse. And when that happens, I think gold is really going to ramp. So that's an interesting one to watch. Let's talk about bonds. Bonds went absolutely bonkers yesterday, all across the curve, 2-year, 10-year, 30-year. They all just absolutely ramped. In fact, I've never seen the yields on a 2-year move 10% in a day, but yet that's what it was midday. And this is a yield chart right here of the 2-year yield. You look at this yesterday. This is just outrageous. I mean, it started out at yield on the 2-year was 187, and it got down to like 173. It went further than that intraday. Turn this into a candle here. Yeah, I mean, look, if you look on Wednesday, the yield on the 2-year was as high as 196, and yesterday it was as low as 169. I mean, this is just wild types of moves. So yields are down across the curve. That's been a trend. Everybody has been trying to fight that. I've been long of treasuries, as I've written about, for a long time, since last summer. Here's a 10-year. You'll see the same thing, just the yields just falling off a cliff, which, of course, just to review, yields go down, bond prices go up. So that's the way the bonds have just been rocking it. Do U.S. yields go to zero? I think it's possible. The rest of the world is at zero or below zero. There's $14 trillion now of yet negative yielding debt out there. It's absolutely unbelievable. So even, at the U.S. 10-year at 186, man, that looks good with no sovereign risk to speak of versus everybody else. The entire German yield curve now, the whole German yield curve is negative. The 30-year just went negative this morning. So, would you rather pay, the German central bank to own that paper, or would you rather have the U.S. government pay you, 1.86% for a 10-year? I think the answer to that is pretty clear. The yield curve flattened out. So it's been in a flattening process. Took a big flattening over the past few days, but you'll see it's this is the steepness of the yield curve. So the difference between the 2-year and the 10-year is 14 basis points. It was up around 27, just earlier in the month. But you'll see it's been in this bottoming process. Let's just expand this out. And you'll see that this is really low. Now let me go to a max chart. You'll see, okay, so here we are at 14 basis points. It's gone. It went negative here in 06. It went negative in 2000. It went negative in 89, and then back here during the 70s. So the negative yield curve is usually a very good indicator of recessions coming, although it doesn't have to go negative. I don't know if we go negative here. We're definitely in the bottoming process. You can see this on the relative strength here. Oops, let me get that out of there. So there we go. It's easier to see now. So we're in this bottoming process. Let me go back to the 5-year. There we go. I don't know if we go down through this, if we break through, 10 basis points, it probably is going negative. But ultimately, that'll go sharply positive. The Fed will keep cutting the short-term rates, and that will make this go up. So that will be, usually that's the harbinger of the recession when it starts to steepen again. But ultimately that will be good for the economy. Okay, so just one other thing to talk about. I have made a call on cannabis. It looks to me like the cannabis companies have bottomed out. This is a Canadian ETF, which I don't own. I own individual names, but my work tells me that these things are in a bottoming process. You can see the relative strength here. Usually when you cross through 30 and then come back up on the relative strength, that's a good indicator. We took a hit yesterday with the market obviously being down, but most of these cannabis stocks are right on the cusp of becoming profitable. And by that, what I mean is in the next 6 months, 9 months or so, most of these companies are going to get out of this just pure revenue growth phase, where they're growing revenue exponentially, and they're going to get into profitability. Now, the first company to do this actually is Afria, well, the big companies at least. And you'll see Afria yesterday, after the close, reported that it had actually turned a profit. And this is the first of the big ones. So you see cannabis had this huge run up in 17, came down. Another run up in 18, came down. Another run up in 19, it's come down. And now I think, a lot of the hype is out of these stocks. And now they're executing and they're building brands, and the story is coming together. More and more states are legalizing. It's on the ballots everywhere. You've got some movement to legalize the banking. So I think, you can pick by the way, this stock is going to open up over 30% higher today. I'm not long this one, but I'm long a number of the other ones. I think these things could be 10 baggers, meaning that this stock from 520 could go to 52. I don't think that's hyperbole. Essentially, you've got an opportunity right now to invest in distilleries and breweries after Prohibition had been repealed. That's where we are right now in the cannabis industry. So thank you for listening. I hope it's been informative. Jack Duval, CEO of Bantam Inc.